Hi, my name's Will Hickson, and it's my pleasure today to have Phil King with me. So Phil is the founder and chief investment officer of Regal Funds Management. Regal Funds Management currently in the process of raising money for a listed investment trust, which Morgans is very pleased to be participating in for our clients. So look, Phil, thanks for coming along. Much appreciated. Had a few questions for you for our investors. So I suppose the first one is Regal is very well known in the institutional community, been around for many, many years, but perhaps out there in sort of retail investor land, maybe not as well known. Would you mind just giving us a brief history of the company, if that's okay, Phil?
Yeah, thanks, Will. It's great to be working with Morgans on our first listed vehicle. I set up Regal around 15 years ago with my brother. I've always had a passion for the stock market. I bought my first shares when I was at school. And I've always been very excited. And so we put our own money in, and then investors started knocking on our doors to invest for them as well. And so we're very much concentrated on investment performance over the last 15 years. And most of the $1.6 billion that we currently manage has come through performance. And we've also very much focused on building the best investment management team that we can. And we have currently around 44 people in our Sydney and our Singapore offices. And that, I think, is one of the largest, but most importantly, one of the strongest teams in Australia.
Yeah, terrific. Cool. Look, would you mind just talking about those long-term returns for us? That'd be great. Thank you.
Our flagship Tasman market neutral strategy has generated attractive returns of 15% over 12 years. And that has come with volatility of 13%. And also, very importantly, a correlation to the ASX 300 of around 0.2. So that's very, very low compared with most investment management funds. Yep. And that's why we think it's an excellent addition to people's portfolios.
Yeah, terrific. And as you say, you run a long-short strategy, so you're both taking long positions and shorting stocks as well, alternative strategy. Do you mind talking to us about why you think now's the right time or a good time to be investing in alternative strategies?
Yeah, now's a great time, I think, for a long-short manager. The disparity between the valuations of many stocks on the ASX has never been so great. With bonds at record low yields, there's many stocks that I think look very, very cheap. On the other hand, there's some growth stocks that are very, very expensive, and research from Goldman Sachs recently has suggested that growth stocks in the Australian market are more expensive than any other market they've looked at.
Oh, wow.
And so, yeah, we think there's opportunities on both the short side and the long side, and we're very excited.
Yeah, terrific. And I suppose, how do you look at those long positions and short positions differently? Very different styles of investing, aren't they?
Yes and no. I think one of the reasons that Regal has been successful is that we are what I call investors on the short side. We follow the same process, and that process means that we get valuation right, and then we try and focus on things like timing.
Sure.
And that's my 20 years experience as shorting stocks has made me realise that you've got to get the timing right to get the good returns. And that experience has actually made us better investors on the long side as well. So we do follow the same process. We are very focused on valuation. And also we are longer term in our thinking on the short side as well as the long side. One of the major differences between the shorts and the longs is what I call risk management. And that includes things like position sizing. Obviously, if shorts go against you, the problem gets bigger. If longs go against you, the problem gets smaller. And so one of the things that we do is generally size our shorts a little bit smaller. And obviously we have to be vigilant. And if things are going against us, we've got to ask ourselves, has our investment thesis changed? Have we got it wrong? Should we cut some, or should we kind of continue to hold it?
Yeah, and just running on from that, Phil, I suppose views on the market at the moment.
Look, Warren Buffett said recently that with bond yields in the US below 3%, he thinks stocks are very, very cheap. And I agree with that. As, if he came to Australia and saw bond yields where they are at the moment, less than 1.7%, he would find our market, which is trading on an even higher earnings yield, very, very attractive. And so I think there are a lot of cheap stocks out there. There's also some very highly priced growth stocks. We've had an incredible run over the last 10 years, and so some stocks are looking expensive. So it's hard to talk about the market generally because I'm a stock picker, but I think if you had to summarise, I think the large cap end of the market has gone ex-growth. the banks, the supermarkets, and even Macquarie Bank has got earnings going backwards at the moment. So there's no growth at the large cap end of the market. And one of our great strategies at the moment is to find the next growth story. And growth stories, because they're scarce in Australia, the market bids them up to very high levels. And so we're trying to find out the next earnings growth story at the small cap and the emerging companies end of the market, discover it before the market, and then not only will we benefit from strong earnings growth, but we'll get a huge re-rating as well.
Yeah, thanks, Phil. One of the things or questions that we get from a lot of our investors is that there's a lot of listed investment groups out there that are currently trading at discounts to their net asset values. What, I suppose, can you say to give us the confidence and the comfort that Regal mightn't end up in the same sort of position as some of those vehicles?
Look, we've heard the same feedback, and I think a lot of people get distracted by the discount or the premium. At the end of the day, the major driver of shareholder returns is the investment returns.
Sure.
And so whether it's a small discount or a small premium, if you hold the stock for more than 1 or 2 years, the key driver is the investment manager's returns. And so that's the number one thing. And hopefully, I am confident that over time we'll eventually trade at a premium. And in fact, on our numbers, one of the other key differences is listed investment companies trade at discounts, whereas listed investment trusts, which is what we're listing, generally trade a lot better at par or a premium. And I think two of the reasons for that is that LICs pay tax, and so their investment returns are always going to be lower than ours. And secondly, there's a lot of uncertainty about franking credits at the moment.
Yep.
And that's why I think LICs are trading at a little bit of a discount. But just coming back to the question of investment returns, which is the key driver, I think, the market is very smart. And often stocks, LICs, trade at discounts for good reasons. There might be some investment management teams that aren't generating returns at the moment. They might have, they might be missing one of the biggest bull markets in history. There might be other LICs that have got overexposure to 1 or 2 liquid microcaps, and that might be why they're trading at a huge discount. The market is very, very smart, and we often use the word value trap, and I think it can be applied to the LIC market as well. There are value traps in the LIC market.
Sure.
I think investors should not so much focus on the premium or the discount, but the expected returns that the manager will generate. And we're very confident that we will generate good returns. And just before I finish, the other thing I should add is that generally the larger and more well-known LICs trade a lot better than the smaller and less well-known. I think Regal is very well-known in the investment industry.
Yep.
And I think we will have one of the larger LITs out there as well. And so I think they're good reasons as well to think that we should trade very, very well.
Yeah, terrific. Thanks, Phil. And the last question for you is just on dividends, distribution policy. A lot of our investors love dividends, obviously. So,
yeah, look, our investment trusts have always paid good distributions. RF1, the Regal Investment Fund, will be a listed investment trust. And so we will distribute the annual taxable income probably twice a year. And I think, I've got every reason to think that should be quite attractive. In the Tasman Market Neutral Strategy, which is the flagship, historical returns have been around 15%, and maybe half of that has come through income. And so going forward, I think if we can generate similar returns, then it should put the investment fund on a yield of maybe 6 or 7%, which I think is very attractive in this current environment.
Absolutely, certainly. Phil, thanks very much for your time today. Really appreciate it. And we look forward to seeing you again very soon. Thanks, Phil.
Will.
Cheers.